Let's get to some trader talk now with Mike Patton of Prosper Trading Academy. He is a big biotech trader, so always wonderful to have you here.
Thank you, Angie. You too.
This is a tough territory to be in.
It is.
These stocks move, and boy, you can win big and you can lose big.
Yes, you can.
So what's on your list right now?
Well, right now we're looking at Acelrx. Acrx is the symbol. And this is a company that basically is just finished developing a product that will treat pain. It's an opioid, and obviously opioids are pretty controversial right now. Opioid addiction is a big problem. So one of the reasons the FDA was willing to approve their treatment back in November of last year is that they have a dosage control mechanism that makes it much easier to keep people from excessively dosing on the product.
Oh, good to know on that one.
Yeah.
So what do you see about the chart that you like?
Okay, so on Friday we were trading around $3.30 a share. The days before that, roughly trading around $3.80 to $4. They went into earnings, and earnings basically depressed the price a bit, mainly because the revenue didn't come in as well as expected. They were expecting about $1.5 million in revenue, got about 600,000. Now that's not so terrible because it's a company that's bringing a product to market, so they don't really have a lot of revenue now. But based on the comments by the CEO and other staff in their recent presentation over the results, they said that they see lots of great traction. Everything is going according to plan for their launch of Desuvia.
Has this stock reached its full potential, do you think?
No, I don't. In fact, Credit Suisse, or Suisse if you prefer, recently upgraded they rated the stock to outperform at $7 a share. That's their target. So right now it's trading around $3.30, so obviously it's a lot higher than where it is now. The highest number I saw was $9 a share, but that was by a smaller company that rated it.
Okay, let's take a look at another chart that you're watching, and this is Pulmatrix, and there's actually some lessons to be learned from trading these biotechs. A lot is going on. I know there's some institutional players inside, there's the inside people who own shares. What's happening with this stock?
Well, basically PULM is not a stock I follow very closely, but it came to my attention because last week, wham, it's just moving out of nowhere. And basically the company, in my personal opinion, I believe the company's stock is moving up because they had a reverse split recently. A reverse split just means that a company needs to stay listed on an exchange and their share price is a little too low. So what they do is they reduce the number of outstanding shares, but they adjust the market cap to match that. So basically, they take 10 shares and convert it into one, so therefore one share is worth 10 times what the 10 shares are worth, and that's what they basically did. Now, after that happens, a lot of times smaller investors will look at these stocks and they'll suddenly see the price went from 27 cents to $2.70. They'll be like, wow, what happened? And they'll start to want to buy. And then there are other people out there who basically, let's just say, influence people to buy by going online and tweeting about the company.
Right. It was all the rage on social media recently.
It went huge on social media. You had plenty of people on Twitter, on StockTwits, all over the internet just talking about it, and that tends to catalyze people to buy more and more. But you have to be aware of what's going on because a lot of times it's just fluff. It's not much going on. Fundamentally, the company is pretty much the same as it was before that rise. So therefore, although we did take advantage of that in my classroom because we saw the momentum, we saw the interest, but at the same time, I warned everyone, hey, don't get married to this because you don't know when this is going to end. So if you're in early, great, but if you're in later, you got to be really careful.
And in fact, you were quick to get out.
Yes, I was. So we took a partial profit. We still have part of the position in, but we basically don't have the same risk exposure anymore because we were in very early. In fact, we actually got in after a pullback, a pretty nice pullback, and then it started to rally again. So at first it looked like I was dead wrong, but then it went. But again, that's where you have to do the risk management. We did have a stop loss in place. I was pretty certain it was going to get hit, but it didn't. It actually turned around and went our way.
Any tracking on some of your other trades?
I did have a signal I mentioned in LPCN. That was one of the stocks we're tracking. They have a treatment for liver fat that they're developing for hypogonadal men. That did actually go well, but I decided to exit early because I wasn't seeing the amount of interest in the stock that I was looking for. So I decided to get out early and take a profit and be done with it. So that did work out, but it didn't work out as well as I hoped. But I guess anytime you can make some money, it's good.
That is a good thing, and thank you for sharing your trade secrets with us. We appreciate it.
No problem at all. Thanks, Angie.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.